You can build a house from the ground up with your VA loan. Zero down, land included, one closing, and no mortgage payments while it's being built. Almost every lender that you're going to call is going to tell you no. And that's not because the loan doesn't exist, it's because most lenders won't touch it. I'm Mark Deacon, I'm a licensed VA loan specialist and mortgage broker, and today I'm going to show you exactly how the VA one-time close works, and more importantly, how to find someone who will actually do it. Now, if you look up VA construction loans, you'll find 100 videos explaining what it is, and that's the easy part. Here's the hard part that nobody tells you. The hardest thing about a VA construction loan isn't qualifying, it's finding a lender who will fund the construction at all. Most of the biggest VA lenders in the country, names you'd recognize, don't offer it. They'll happily refinance your house after somebody else builds it. They just won't fund the build. So this video is two things: how the loan actually works and how to spot a lender who's going to waste 3 months of your life before telling you no. So let's start with what it is, because the name tells you the whole story. A one-time close, sometimes called a single close or construction to permanent. It wraps three things into a single loan with a single closing. Number one, the land, whether you're buying a lot or you already own it. Number two, the construction itself, the actual cost to build the house. And number three, your permanent 30-year mortgage. One application, one appraisal, one set of closing costs, one rate. Now compare this to the old way, which is what most veterans still end up doing. You get a short-term construction loan from a bank, you build the house, and then you refinance it into a VA loan when it's done. That's two closings, two sets of title fees, two underwriting packages, two appraisals, and you're exposed to whatever the rates are doing when the house finally gets finished. The one-time close eliminates all of that. You close once before the first shovel even hits the ground. Here's what makes this loan genuinely different from anything else out there. Zero down with full entitlement, you can finance 100% of the land and 100% of the construction costs. No down payment, and there's no other construction market on the market that does that. No mortgage insurance ever, not for the life of the loan. And you don't make payments while it's being built. And this is one thing that people don't believe. The interest that accrues during the construction is typically built into the loan through what's called an interest reserve. So you're not paying rent somewhere and a mortgage on a house that you can't live in yet. Your first mortgage payment comes due after the home is complete. Your rate is locked up front before construction starts, and a lot of lenders offer a float down option. So if rates drop during the build, you can capture that. And when the house is finished, it just converts. No second closing, no requalifying. The construction loan becomes your permanent VA mortgage automatically. One more thing worth knowing: with full entitlement, there are no VA loan limits. What you can build is determined by your income and credit, not by a cap. So if you're not making payments and the builder's getting paid, where's the money? Well, at closing, the construction funds go into an escrow account, sometimes called a draw account or a loan in process account. The builder does not get a lump sum. They get paid in stages as the work actually gets done. Those stages are tied to milestones, typically foundation, framing, rough mechanicals, drywall, and final completion. An inspector verifies the work at each stage before the money is released. And here's a detail I want you to hold on to because it protects you. Before every single draw, your lender is required to get your written approval. That's a VA rule, not a lender preference. You're not just a bystander watching your house get built. You sign off at every stage of the way. The appraisal works a bit different too. Since a house doesn't exist yet, the appraiser values it as completed based on your plans and specifications. So let's talk about the actual wall you're going to hit. The VA loan allows this loan. It's in the guidelines, it's been in the guidelines for years, but the VA doesn't lend you the money. Private lenders do. The VA just guarantees part of it, which means every lender decides for themselves whether to offer it, and most of them don't. Construction lending means inspections, draw management, builder vetting, and a file that stays open for a year. A lot of lenders look at that and decide it wasn't worth the operational headache. So here's how to save yourself months of wasted time. Three signals a lender doesn't actually do these. Number one, they'll tell you that we can look into it. If a lender has to look into whether they offer a product, they don't offer it. A lender who does these will tell you yes immediately because it's a real part of their business. Number two, they start steering you to a two close. Why don't you get a construction loan from a local bank and we'll refinance you when it's done? That's not a strategy. That's just them telling you that they don't fund construction. Number three, they can't answer basic process questions. Ask how draws work. Ask who vets the builder. Ask what happens if the build runs long. A lender who does these answers instantly. And a word on the builder. The VA used to require builders to register for a VA builder ID. That requirement was eliminated. which removed a real friction point. But your lender still has to vet your builder on licensing, insurance, and relevant experience. So your builder needs to be legitimate and documented. They just don't need that VA number anymore. So let me be straight about who this actually fits. If it's a strong fit, if inventory in your market is terrible and building is genuinely a better path, or you want something specific that you can't find on the resale market, or you already own the land, or you're in a rural area where custom building is just normal. It's a harder fit if you need to be in a house in the next 90 days, or if you're not prepared for a build that could take up to a year, or your build is not established enough to pass a lender's review. Now, one honest risk that you should know about, and that's the interest reserve that I mentioned, covers a set construction timeline. If the build runs significantly long, that reserve can run out and you may be responsible for the interest. That's not a reason to avoid the loan. It's a reason to work with a builder who finishes on schedule and to understand your timeline before you sign. So, quick recap, the VA one time close lets you build a house with zero down, one closing, no payments during construction, and no mortgage insurance. It's one of the most powerful benefits that you've earned, and hardly anybody uses it because hardly anybody will do the loan. And the last part is the whole reason I made this video. Most people making VA loan content are not licensed to originate these loans. I am. So if you're sitting on a piece of land or you're staring at an empty market wondering if building makes sense, that's a conversation you can have with me directly. I put together a free VA Homebuyers Playbook and I put the link down below. It is 17 pages of how to use your VA loan to build wealth. And it covers the one-time close as well as many other things that most people don't know about the VA loan. I've also included a link to grab time on my calendar. So bring your situation and we'll figure out whether building is actually the right move for you today. I'm Mark Deacon. I'm a VA loan specialist and a mortgage broker. We operate in every state except for New York. This is a benefit that you've earned, so let's use it, and we'll see you in the next video. Now, don't forget, if this video was some value, please like it. If you have any questions, please comment below, and please follow us for more videos like this. We put out a video every single week on how to build wealth for your VA loan.